Hello, everyone. Today is Thursday, March 14, 2024. This is the week in charts. Obviously, I want to thank all you guys and girls for attending. I appreciate you taking time out of your busy schedule to be here. So, what are we going to talk about? Well, current market conditions, obviously, we always cover that. That goes for crypto and stocks, or stocks and crypto, I should say. Your questions on trading, your favorite stock and crypto picks. Just punch your symbols in one at a time, and I'll be happy to take a look at them. And one at a time is just so I know what I covered and what I haven't. So things I wish that someone would have told me, part 8. Actually, it's part 10. And that's a series I've been doing, obviously, for a while. And almost everything I do has the person in mind from 20 something years ago. And you newer traders too, because a lot of times I wish I knew these things. And you know what? You often have to remind yourselves of these things sometimes. I want to follow up on the methodology and action by looking at the mystery charts, and the one mystery chart is still open. Two did not trigger, so we'll talk about that, and one was removed. That'll make sense in a minute. If you need to reach me, Dave at DaveLandry.com. YouTube is at Dave Landry. TikTok at Trend Following Moron, and X is T Following Moron. I do answer all comments that need answers. So if you're watching on YouTube, or if you're watching the recording of this on YouTube, feel free to punch in a comment and I'll be happy to answer that there. I also want to spend some time, or a lot of time, I should say, talking about crypto and how trading is trading. And like I said last week and weeks prior, likely you're trading traders, not markets. That was a disclaimer screen. It just flew by. As you know, you can lose money trading. Or as often sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. There it is. You're trading traders, not markets. So it's not about the crypto. And a lot of people are like, well, crypto's BS, Dave. It's like, yeah, but it's going up. Who cares? And people were complaining and poo-pooing Bitcoin at 1,000, 2,000, 3,000, 4,000. Now it's 70 something thousand. And guess what? As soon as it tops out a little bit, they're going to say that they were right. Predict early and often, I suppose. Okay, first we have a couple of crypto pairs I want to go through. RNDR, and a lot of these were in last week's the week of charts. I want to follow up on those and show you a couple of new ones here, and then I'll show you my exact live portfolio when we get to the live chart. So there's the trades there. As I've been saying, I would not bet the farm in crypto, although I do find myself wanting to step on the gas a little bit. And you know what happens when you do that, right? But for now, I'm just having fun with it. I'm taking it easy. And as I often say, old guys kind of rule when it comes to crypto, provided, of course, they're not willing to confuse the issue with facts and just go with it, right? But by that, I mean old guys rule. That is, if you look for trends and pullbacks, and in a lot of cases, just buy the strongest pairs when the market is in a rip-roaring bull market like it is now. Keep in mind, cycles in crypto change really, really, really fast, really quick, I should say. Anyway, so that was the entry, put 1,000 in, and then I took partial profits. Actually, on this one, let me correct that. I actually made a mistake. I think when I went to put in my limit order, I ended up buying more. So as a general statement, what you should do is, if you make a mistake, you should correct it immediately, as Linda Rasky said. This isn't going to kill me an extra 400 bucks on this trade or whatever it was, 466. So I decided just to let it ride, and I was soon profitable. So I said, well, the heck with it. Let's just let it go and see what happens. I don't necessarily recommend that type of behavior. Brian's asking, how do I see the other questions? If you're on YouTube, you can see them. You can't see them on GoToWebinar. So anyway, that was the entry there, and it's sort of a combination of a pullback, rallying out of a pullback, and it's also was me playing the relative strength game. The relative strength game, you're just sorting these pairs by the strongest ones. When we get to the live charts, I'll show that. Although, I hate to keep repeating this, but it doesn't work quite as well, because right when we're doing these shows, the pairs are flipping over, and you're not seeing like a whole day's strength. And that'll make sense in just one second. What you can do to help you in that process is go to like cryptobubbles.net. Anyway, so that was the entry in crypto. As I've been saying ad nauseum, I just put a 20% initial profit target, and at that point, I take off half. In stocks, in some cases, it might be 15%. In other cases, it might be 30%. Eventually, as the crypto market begins to mature, I might have to look at the volatility of the market and work in my IPT. But right now, it's just simple to go in at 20% because that's a good round number. And that seems to be working out pretty good for now. So I took off half of those shares. So that puts 876 back in my account by exiting half. That's $143 in profits taken. So it would be $286 total. So on $1,000, I'm looking for about $200 profit thereabouts, 20% obviously. And then I'm taking half of that off. Now this run, as you can see, was 59% in a couple of days, and that's the kind of moves that we're seeing in crypto right now. And then the mark to market was 1,080. So let's add all that up. 1466 in, 876 out at the initial profit target, mark to market value of 1,088. So that's $498 or 38% over a short period of time, and that's pretty impressive. And you got to be careful annualizing, although I do like to do it a lot. But annualized, that's just ridiculous returns. Now here's another one, and I believe I was in this one last week. Yeah, in fact, I know I was. So in this case, I didn't put $1,000 in, and you might be thinking, well, Dave, you're not consistent. It's like, well, what happens is I'm wheeling and dealing with this stuff so much is that I tend to run out of money, and that's where I want to put more money into crypto to trade more and more pairs. And then I have to tap the brakes on myself a little bit. If this is going to be a longer-term sustainable bull market, then I'm just going to slowly grow the account or quickly grow the account in the case it has been somewhat lately and see where it goes. And I'm having a lot of fun with this too. And one thing I've been thinking about too is from a psychological perspective, it's really easy or easier to trade a small account. When you start trading a big account and you start seeing the equity swings like I saw a while back in the crypto, it was just, it began to eat at me after a while. But it's much easier to trade a smaller account than it is to trade a much bigger account when it's that volatile. I've kind of grown accustomed to a certain level of volatility in my own trading in stocks. And believe me, a lot of times it's like, you enter something and you got one account's down several thousand, and you have more than one account with that same trade. So you just kind of hate to even look at the other accounts. And believe me, it's tough. And that's one thing that I'm going to preach a lot. And when we get to, or I do preach about a lot, is that it's not the easiest thing in the world. Trading it is. And when we get to the things I wish I knew, I'm going to touch upon that a little bit. And we talked about that last week too, by the way. The map is not the territory. So if you look at the playlist for the weekend charts, you can pick that up. Or you can watch that, I should say. Anyway, in this particular case, because I was out of money, I guess, or I did this on a smaller account, even smaller account, $667 going in, $398 coming out for a profit taken of $64. Woohoo! But it adds up after a while, especially again if you're doing it over a short period of time. 64 times 365 is what days a year? What would that be? About $18,000 if my math is correct. Anyway, one thing that I've also been doing, I talked about in prior webinars, is years ago, of course, being the nerd that I am, I looked into mining, and I actually found miners on eBay that you could get used, or some cases maybe even new, for a couple $100. And it's like, wow, this is amazing. Maybe I should try it out, get a half a dozen of them, plug them in the back of my office or something, crank up the AC and see what happens. Well, the technology is such that it changes so fast that those miners would actually cost you money. It costs you about $10 a day to plug those in. So every time you plug one in, you'd waste about $10 in electricity. Now, maybe if you live someplace where electricity is super duper cheap, it would work. But the research that I saw from doing the on mining is that you really need to be a big boy with deep pockets, and you need to be somewhere where electricity is really cheap. So what I started doing as kind of for fun was, when I was trading the altcoins, I'd keep a little money in the native currency, like $50 a trade or whatever. And that was kind of fun for a while, especially when the altcoins were running. But a lot of these things, as you likely know, if you've been trading crypto for more than a day, eventually go to zero or just absolutely implode. So that experiment sort of failed miserably. I think after all was said and done, I had like $650 left, which is better than a poke in the eye, okay? But I know I put a lot more into it than that from the mining, so to speak. So basically what I was doing is if I made money in a shit coin, altcoin, I would take a little bit off and leave it, or just leave a little bit in the native currency and stop out on the rest. What I started doing in more recent times for fun, and I know you want to party with me, is just mine, so to speak, a small amount. So when I hit that IPT, let's say I got $1,000 on, hit an IPT of take 100 off, I'll put $25 into Bitcoin. Now that goes a little bit against my buy and hold, my aversion to buy and hold, but I'm doing it in a very small way, and it's just fun. I just want to see if I could accumulate, or how much Bitcoin I could accumulate in the process. If you guys been around for a while, you probably know, like back in the day, commissions were like $50 a trade. Sometimes, was it a round turn or it was something ridiculous? I remember, like if you were trading like a small stock and you were buying a lot of shares, I think it was like $60 going in and $60 going out. It was just absolutely ridiculous. But that's a whole nother story. So I still have a little bit of that mindset. So $25 here and there off a trade to stick it into Bitcoin as opposed to US dollars is not that bad. I think I think that's plausible. Now we'll see if it becomes a large amount of money, then maybe it becomes a big deal. Anyway, this one ran up 136%. You know, by the way, Bitcoin, I'll make a prediction here, will lose half of its value at some point. Okay, so I said it. So when it loses half its value, you know, these guys have come out like, oh, it's the end of the world. It's like, well, who knows? Stocks occasionally lose half of their value too. By the way, every asset class at some point in your lifetime will lose half of its value. And I'm amazed at how many times in my relatively short lifespan, my years are starting to add up, obviously, but in my relatively short lifetime, I'm amazed at how many times stocks have lost half of their value. And take a look at gold and all this other stuff. And not to go too far off on a tangent, imagine that, but there's this gold group or gold company, whatever, and it's the name is group, blank group. And a while back, he was like, if you like me, I can't afford to lose 30% of my investment in the stock market. It's like, wait, hang on a second. I looked at gold in like 25 years without making new highs and had like a horrible drawdown. And gold occasionally loses half its value. So it's a bit of a misnomer to say that gold is a safe investment. There are no safe investments. Anyway, 136% run, pulling back a little bit from there. Mark to market 649. Let's add it all up. That comes to $405. And remember, we put up 667, so that's 60% return. Do you still day trade, or have you shifted to a swing and longer? Somebody asked the same exact question last time. I'm slotted as a swing trader, and I'm looking to hopefully get profits. I know I just said hope, but hopefully get profits trading stocks within a few days to maybe a few weeks, and hit the initial profit target. Same thing I'm doing here with the crypto. And every now and then in crypto, so far, I've been able to hold a few of these every now and then for months. The real money's in the longer term trends, but that's where the risk is and the drawdowns. And also, as we'll get to a little bit later, your accuracy is going to be abysmal with longer term trend following. You're going to be right only about 26% of the time in capturing those longer term trends, and 75% or more of the time, you're going to lose money. Now, that's why I take a hybrid approach and trade for the swing trade profit. Now, I do a little too much day trading, and that's in more recent times when I'm kind of stuck here, so to speak. I don't mind being stuck here, don't get me wrong, as I said last week, but I have a show with stock charts. I no longer have a show with stock charts, but I have a lot of appearances with stock charts. I did your daily 5 this week. I'm occasionally on a final bar. I occasionally make some other appearances. So usually there's something going on weekend charts, and so I have to be here working, which I don't mind. I like what I do. So I'm stuck in front of some of these are double monitors. Well, all of them are double monitors. 1, 2, 3, 4, 5, and then I have a TV that's, I forget how many inches, 40 inches maybe a little bit bigger. So I've got the equivalent of 10 or 12 monitors, which is probably a bad idea. I think it was Dakota said having a monitor on your desk is like a slot machine. You don't want to feed it. But like any trading, if I wait and wait and wait, I can make money intraday. It's the in between that kills me. The route days you could absolutely print money on, and I did some presentations on that. So check the quick clips on YouTube for that. And that's YouTube at Dave Landry is my handle. Anyway, here's the near. Again, this was just $1,000 put in, and you can see the market was going straight up. I'm not a breakout trader in stocks as a general statement, except for maybe an IPO pattern. But in crypto, when crypto is blowing and going like it has been lately, you could just buy them as they're going straight up. And I bought one that was at nosebleed levels earlier, and I'm not sure whether I did that being prudent or I wanted to kind of show off right before the show. And I'll show you how that worked out in just a few minutes. Anyway, once again, 20% profit target. So $200 profit total, and half of that, and it always seems to come out to $596. It's probably with the commissions and all factored in on that. And on this particular trade, like all the other ones, when I hit that IPT, I put $25 into Bitcoin. And if it doubles, then I might even mine a little bit more off, so to speak. So let me just explain that real quick. So let's say I got in here at like 5 and change. Let's just say 5 round numbers, make the math easy. So at 10, I'll put in an order to just peel off. What would that be? It'd be 2.5 of these tokens, if you could, whatever that is, 2.5 tokens, which is not a whole lot at 100%, because a lot of times these things will spike up 100% and then they'll come right back in. So at least you grab the little piece at that high and put it over into Bitcoin, and that's been working out pretty cool. Every now and then I'll hit one of those, and these things will implode right after. So I feel like it's money that would have been lost by not taking it. Not a lot, but just a little bit here and there. But it is starting to add up. And what else do I want to say about that? Yeah, because it's money that you would likely not have. Oh, I know what I wanted to say. So let's say it blows through 100%. Then $25 is nothing, because if it's going to keep going 200, 300, 400%, then you just take a little piece off. And again, I kind of see it, and maybe I'm a little too old school because I do remember commissions, and I just kind of see it as my commission, but I'm actually giving that back to myself. By the way, and I talked about this in a live presentation I did with stock charts when I was in Redmond, Seattle, near Redmond, Washington. There, I got it. Near Seattle. And the thing is, because there's no commissions doesn't mean there's still not a vigorous, there's still not a vig in the trade. There's a cost to doing a lot of trading, like I said, the intraday stuff. But before I digress too far, so that was a 65% move in a few days. That's much better than poking. I marked the market 728. Let's add it all up. And 364 total. So that's a 36% return. Now, when markets settle down a little bit, or sometimes when these pairs come public, these new ones, you could trade the core methodology, trade like the first pullback or pullbacks in general, or Landry light pullbacks, whatever you like, TKOs and things like that. So this one's set up, and I bought it right here. And here are all the trades, and I'm going to show you the second half of these trades, or the second shot that I took at this. But those are all the trades if you want to check them out. So $983 went in. I'm guessing that's what was left over in my account. Now, keep in mind, if you were trading a stock such as an IPO, the pattern that would look like this would be like a first deep retracement, or even something like a Landry light pullback. Your normal stop would be below that low of the pullback at least, plus some wiggle room. But these pairs are moving so fast, and I just don't have the time to go in and track it all down. But likely what happened was this thing came in a little bit, and I decided to stop out because other pairs were moving, and I wanted to open up some slots, so to speak. So I did take a loss, as you can see, of $218. That's a pretty big loss percentage-wise. And I did want to show you that sometimes you lose money in these things, but you could still make a lot of money even with the occasional losses. So we add that all up. Again, that's a loss of $218. Now, this thing remained set up, and I thought it still looked pretty good. And especially when it started rallying a little bit, I said, you know, Dave, you're trying to, maybe you're trying to get too cute here, but it's set up again. So you have to kind of forget that you were just in that trade. And I know it's hard from a psychological perspective, but you have to forget you were just in it and look at the pattern as if you're just seeing it for the first time. And so I said, you know what, Dave, this looks pretty good. I'm going to go ahead and get back in. So that's the rest of the trades here. Got back in at 4.99. Initially got in for 0.48, and then I got back in at, let's just say, 0.50. So again, once again, using an IPT of 20%, and only $457, and that's because I was in a bunch of other ones at the time, and maybe not all of them had hit the IPT. So that's all that was left in the account. Flipped them out at 20% for a whopping gain of $44, $88 total, because that's only half of the shares that are coming off, or whatever you call these things. And notice this thing ran like 69%. Now, that's just a small position, but if you add it all up, including the mark to market of 325, it's not too bad. It's $141. And percentage wise, obviously, that's a 25% gain. So better than a poke in the eye. Now, we're going to go to the crypto live charts in a few minutes. Any questions on the crypto at the moment? And then if not, we'll we could certainly cover it again when we get to the live charts. All right, let's talk about the mystery charts and methodology in action. So here were the three from last week. This one did not trigger, and I'll show you the chart here in just 1 second. This one got a little long in the tooth, a little bit too long in the pullback. And this one right here is still a valid setup going into tomorrow. It's the one stock that I recommended for tomorrow. But you can see in all these, they initially looked pretty good. This was an IPO, took off and made a nice first deep retracement. This one pulled back to the 30 EMA after accelerating higher. It's accelerating momentum strategy, and it's also a Landry-like pullback. And this one over here is also accelerating momentum strategy in a Landry-like pullback. So here's the CGON. That was the entry. You could see it absolutely imploded. It did come fairly close to the entry, but that's why we wait for entries. And as I say ad nauseum, 6 months from now, somebody's going to email me and say, Dave, what do I do with this turd you recommend? And I'm like, I never would recommend a stock going down. And they'll say, yes, you did. And I'll go back and look and say, yeah, I see it in the service on March 6th, and probably was recommended a few days before that, but it never did trigger. And I'm amazed at how many times that'll keep you out of trouble. So you can see in the EWTX, the entry was here, and it went days and days and days and days and days without triggering. Beginning to lose a little steam in here. It looks okay longer term, but I would leave it alone for now. And it's traded mostly sideways, as you can see. So that one came off. So we still have one live mystery chart, and I'll follow up on it next week. If you're watching this live on YouTube, please like the video. If you're watching it live on GoToWebinar, if you get a chance, like the video on YouTube. If you don't like the video, go have no fun somewhere else. And then please subscribe while you're here. Now, lately I've been doing a series about things I wish somebody would have told me, and that goes back to last December. I woke up with this in my head, these 20 things that I wish somebody would have told me when I was just beginning to trade. And we're getting close to the end of this. The problem with the series is I thought it would take 1 or 2 or 3 parts, but each week I start thinking of, oh, there's another thing, there's another thing. So I'll probably wrap this up, and then we'll revisit it forever, okay, over the next several years. But anyway, those are the 20 things. So I want to pick up on those and once again throw in a few additional ones too. So you must have minimum losses while allowing for unlimited gains, and not just the opposite. There's a lot of trading systems out there that make a little bit, make a little bit, make a little bit, make a little bit on a fairly accurate basis. If somebody shows you a system and they're like it's 80% or 90% or even more correct, you need to look at how much money they're making, and then you need to play devil's advocate and see how bad it is when they get whacked. I saw somebody's returns the other day. These people that are bragging about how great they are, these YouTube gurus, And they were brave enough to show what they claimed to be actual returns, and they had a 30% whack in 1 month. Who's to say you don't have two 30% down months back to back? That's pretty scary, okay? Not that you won't have losses. Trend trading, you'll have a lot of losses. We're going to talk about that in just 1 second. But the bottom line is you have to make sure you're able to occasionally knock it out of the park. So just a quick example. This was one from last week. This is Tia. And you could see I was able, this is like an eternity in crypto. Way back last November, December, January, and then where did I finally get out? February, March. So it's like 5 months or so in this. Monday, Tuesday, Thursday, Wednesday. That's what it sounded like. You can't eat like a bird and shit like an elephant. And that's what a lot of these little reversion to the mean type of systems do, selling options for instance, naked options. I get more former reversion to the mean type traders than all the other methodologies combined when they come to me. So that's kind of an interesting thing. But you can't eat like a bird and shit like an elephant. That's an old commodity adage. And you can go broke taking a profit. And that's exactly how a lot of people do go broke. Now, William Eckert comes to mind. The desire to maximize a number of winning trades or minimize a number of losing trades works against the trader. The success rate of trades is the least important performance statistics and may be inversely related to performance. And I don't know what my percent correct is. I don't think it's fantastic, I can tell you that. But as long as I catch a decent winner every now and then, I don't get too caught up in that. And I think Eckert went on to say, or someone else like Eckert, like Richard Dennis or someone, that what feels good over the short term doesn't really work longer term. And that's kind of hard to wrap your head around. When you first get started trading, you're just craving that little quick gain, that little quick dopamine rush. And that's not how it works longer term. That's not how any of this works. So you will be wrong a lot. That's one thing you have to wrap your head around, and often. And even when you're right, you're wrong a lot. And along those lines, as a trend follower, and by the way, the only way to make money is to capture a trend. So the bottom line is, I don't care what your trading type is, as soon as you become profitable in that trade, you have become a trend follower because that trend has begun to develop. But as a trend follower, you're going to spend a lot of your time, the majority of your time, less wealthy. And people a lot smarter than me have brought this point up, including Robert Frey. I think he's got a doctorate in mathematics or something. I forget what fund he was with. Is it the quantum fund or one of those funds that made a bazillion% return or whatever? But anyway, one of my clients years ago sent me a YouTube on him. You could probably still find it. And he said you spend 75% of the time in a state of regret. In other words, drawdown. Now, here's something that maybe we could back into just for a second. The neurology of trading, I talk a lot about the psychology of trading, but the neurology of trading, easy for me to say, is very important too. And the biggest thing there, in addition to our brains having caught up to modern society, we still have a bit of a caveman brain sloshing around up there. But the biggest thing is that a loss hurts twice as bad as, or the emotion attached to a loss is twice the emotional reaction as the emotion attached to a gain. My daughter wanted to go to, my daughter likes to gamble as long as it's my money. That's another story. But she was in town for her birthday and she wanted to go to the casino. So we're like, yeah, whatever, that's fine. And I'm in the bathroom and some guy comes in there and he's all bummed out. He's like, I gotta go make it back. And I'm going like, that's why casinos are doing so well, because they know you're feeling so bad about that loss. You just want to get that high again. You want to chase that high, and chasing that high is what leads to gamblers' ruin. So I think with trading, if you understand the neurology of that that you're going to be in a state of regret, draw down a lot, and that's going to hurt and that's going to suck. So whenever you feel really good about trading, just be patient. You're about 2 minutes away from your next drawdown. That's one of the few things I can guarantee. Greg Morris once pointed out that markets only make new highs 4% of the time, and I put that in trading full circle. So one thing you have to remember is even on favorable moves, markets will spend a considerable amount of time backing and filling. Now this chart's a little dated, and I'll show you one that's actually a live trade here in just a second. But I thought it'd be fun. I know you're gonna party with me, but I wanted to show you when it's making new closing highs and when it's backing and filling. And I forget the exact stats on this, but just eyeballing it, I would say 90% of the time you are giving up open profits. And that's why trading hurts a lot, okay? But wrapping your head around that and accepting that and learning how to live with that is key. And if you can't do it, then trade at such a small size, it's nearly meaningless. And that's why I'm having so much fun with crypto, printing money, okay? Because it's a small account and I don't care. It's not going to change my lifestyle if my crypto account blew up tomorrow. When I had an offshore account in crypto, which the government no longer allows KuCoin in the United States, but KuCoin was great, and you could leverage up and do all kind of crazy stuff over there. I had a lot of fun with that until the account started getting bigger and bigger and bigger. Then the old psychology starts to rear its ugly head and everything, as I alluded to earlier. But anyway, as you can see, most of your time, as Mr. Frey pointed out, you're going to spend in a drawdown the stock or whatever other market is backing and filling. So as I mentioned previously, it's harder than it looks. Sometimes the map is not the territory. I could say, hey, go out and trade this Landry Light pullback, pretty easy thing to recognize, pretty easy thing to do. Here's the money management, knock yourself out. And you look at 100 charts, it's like, man, this thing works great. I love this thing. And then when you try to do it in real time, it's like, wait a minute, I'm losing money day after day after day after day. I better just get out. And then what happens? The market takes off without you. Not all the time, but quite often. Anyway, it's harder than it looks, even a good time. So here's a live example I was talking about. So we got in this trade way back last July. So Brian earlier was asking me, hey, do you just day trade or do you still swing trade or whatever? Well, I've always been a swing trader, and then I've always held positions as long as they've moved in my favor. And I judge that by not being stopped out. When I'm stopped out, I'm stopped out. I forget exactly what a stop is, and this one's probably down here somewhere now. And I allowed that to loosen up over time. I think we talked about that last week. But anyway, you can see it just kind of went sideways for a while. So you just stayed a drawdown. And I think I missed this one right here, but right here you can see you're feeling really good, you know. And then if you look at this on an intraday basis, you're up here, okay? This thing went up, let's just say 55 to 60 something, like 8 points, okay, whatever that is. So you're feeling good. It's up, you're up 8 points, and then you go to lunch or whatever, and you come back in, and this thing has dropped 4 points on you, okay? So you're still up 4 points for the day, but you just lost that 4 points. So now all of a sudden, instead of feeling good, you're feeling a little not so hot. And that's a kind of backing into something here. That's one reason you don't want to watch every little zig and zag on the chart, or that'll make you crazy, literally. Anyway, you can see, you know, great day here. Bam, off to the races. You come in, you're up 3 points, you're feeling good. You know, you start boat shopping. And then what happens? The market comes right back in. And lately, we've been kind of drawing down a little bit once again. So notice that there's not that many new highs in here, okay? There's a new high, there's a new high, there's a new high. There's what, a half a dozen, maybe 10 or 12, okay? And how many trading bars are there in here? Quite a few, okay? So, and I guess right here you had quite a few highs, but even within these highs, intraday at least, it's pulled back quite a bit, especially like this day here. You're feeling good and it comes back in. So you get the idea. You spend a lot of time less wealthy. All right, any questions before we hop into crypto? And if you want me to take a look at some stock picks, feel free to start putting those in now. We'll take a look at crypto real quick, and then we'll pop out to the overall market, the overall stock market, that is. All right, crypto. The ones in blue are ones that are kind of on deck, so to speak, or I'm looking at. And one thing that I was thinking about right before we went live is you can't kiss all the women. And I remember looking at this Baba way back, probably when it was half of what it was. And I need to go in and look and see if I made any trades. But my account was all filled up with trades, so I didn't have a slot available for it. And that's why I didn't take that trade. ZRX was one that was going straight up. And I kind of want to use it as an example. And this is what I've been watching. It's been killing me because I haven't had a slot available for it. But even though when a slot opened up a little while ago, I thought it'd be kind of fun to just go in here and make a trade and just see what happens. See if it could go another 20%. Now it's a little scary to do this kind of trading, but when they're really blowing and going, you could actually just sort these by, as I often say, by new closing highs. Okay, and there's the Baba I've been talking about. And you want to buy the ones, this LPT looks pretty good, okay? I like it because it's hitting the top of its range. And I've got an alert set, as you can see right there. LRC, that would have been pretty good. Looks like, I don't know why I have this line here. I don't know if I took that trade somewhere else or not. Probably not. ZRX we just talked about. So when the market is really blowing, you can just buy the ones that are making new highs. I'm already long this near. We just talked about it a few seconds ago. But you can see it's banging out new highs with vigor. Now would be a good time to buy a market like this. Now, keep in mind, this is a rarity. This does not happen that often. The only time I can really remember when it happened in stocks was 1999. There's been a few amazing periods in between, but the most amazing period of all in stocks was 1999. The hot .com stocks were just going straight up. I recommended one in my column, and I forgot that I had recommended it. My public column was public to everyone, and it went up. It triggered, and it came back in a little bit. I think stocks were still trading in eighths back in. Right, it was right before decimalization. And it triggered, it came back in a little bit, and then it went up 58 points. And I think it was I forget what the stock was, maybe a $40 stock at the time, a $30 stock. But it went up 58 points in one friggin' day, and I missed it. That was a hard thing to do, to recommend something and not take it yourself. And I would later do a trading service, which forced me to take my trades. But you can see some really cool looking stock, crypto in here. And again, sometimes when they're going straight up, and this is an anomaly, this doesn't happen that often, but it's happening now, and it's been happening all of 2024, and I'll be talking about it quite a bit, late 2023 too. So you just sort these, like something like this, even though it's strong, it's kind of wide and loose and all over the place. Notice it has long tails. You probably want to avoid that. So let's go back to my positions. Again, ZRX has not hit the IPT. I got in this one a little while ago. Now, keep in mind with this relative strength trading, I might scratch out of this one and hop into something that's a little more hotter. So you might have to jockey for position, so to speak, and enter a few of these trades before you start catching them. But look, I have 1, 2, 3, 4, 5, 6, 7, 8 trades that are free rolling. So barring overnight gap, the worst I could do, well, there's no overnight gaps in crypto. So barring these things completely imploding, the worst I could do is break even. And I would likely get out long before that. So my break even is down here at 5. So like I said earlier, I'll put an order at 10 just for S and Gs and take a little bit off and throw it over in Bitcoin just to see what's going to happen. So here's the FET. You can see entry was way back here. It did go negative from my after hitting the IPT, but it just kind of barely dipped below. So I stuck with it in this particular case. And I usually only put a hard stop in these things when they start to underperform for a while, just FYI, and that allows me to ride out a few of these spikes. So again, you can see this is the one we talked about earlier, kind of a pullback slash relative strength play. So far, so good, knock on wood. This link has kind of been all over the place. Now, this would be one, and somebody was asking me recently about these ones that are free rolling. Do you just sit in them? And the quick answer is yes, but let's say that I really, really wanted to buy something that was really going, I would actually maybe exit something like this early that's not really taken off, or at least not taken off anymore. Mobile was another one that's kind of getting a little funky in here, but now it's beginning to improve. It shot way higher and then came back in, and then now it's trying to rally again. So that's it. This type of trading is a little bit different than what I normally do. This is a very specific type of time when you do this kind of trading. And as I preach each week, the crypto cycles are really fast and really quick. So I could stop out of all of these tonight, tomorrow, the next day, or maybe by next week in charts. And then I might go back to sitting on my hands and waiting for just more generic type of core trading positions here, such as a Landry like pullbacks, TKOs, etc. ALIZ, you can see that this is one I bought going straight up. And I know it's kind of like even ludicrous would say that's ludicrous buying something that's just going straight up. But hey, market's all going straight up. So you need to be willing to put up or shut up. Here's the arrow, which is again more like a core trading service position. You can see nice thrust higher followed by a pullback. So far so good. And then finally, Prime has come back in to its after trying to break out in here, but that's free money or free rolling, so to speak. So I'm going to stick with it a little longer and see how it shakes out. Okay, any questions on crypto? We'll go ahead and shift gears. If not, we'll shift gears and go to stocks. And then I'll check in with my YouTube brethren to see what's happening there. Let me get this shared. And then while I'm doing that, I'm going to go check real quick and on YouTube. Okay, I'm not seeing any questions on YouTube. Got a like or two, thank you. All right, let's go to all right. Let's start off with the P's. S&P 500 looking pretty good. You know, draw your big blue arrow. In this case, it's white, but draw your big blue arrow. Look at your 30 EMA, 30-day EMA. 30-day EMA is one of your best friends in crypto and stocks. If all you did, especially in crypto right now, because it's such a crazy market, was buy things, or I should say, if you avoided the ones that are below the 30 EMA and never bought anything below the 30 EMA, you would avoid those shitcoins that are really shit. You'd be shocked at how many of them just implode. But you can see the S&P's been in a tear. And look at the amount of Landry light in here. If you look at the ACP platform and you take a look at the Landry light, and I could do that really quick. Let's see how fast I can do that. Let's go back here to crypto, and we'll take a look at the Landry light, and that's kind of an amazing thing, if I say so myself. So it looks like the spiders will come up. That'll work. So if we go to spiders, and then if I put in my, looks like it's already in there. Okay, that's cool. So look at the Landry light. We have 90 bars. It's been 90 trading days, which is months, going all the way back to, what's that, November 1, 2, 3, 4. And I'm probably jinxing it, but that's an amazing run. 90 days where the lows have not touched the moving average. And that just tells you right there, when trend following is good, it is good, okay? So let's hop back to the TC. That's the P's. Let's take a look at the NASDAQ. NASDAQ composite looking pretty darn good in here. It did come down to kiss the moving average a few times, but that's okay. This is a Landry light pullback here, technically, because it touched the moving average. Here's another one here. And if all you did was wait for markets to look like this and trade pullbacks to the moving average, not buy down here, but buy when they begin to rally out, you would probably do fairly well. Let's take a look at the Rusty. Rusty's a bit of a bummer. It imploded a bit today, down over 1 3/4%. It just can't seem to get out of its own way and has tons of overhead supply. The idiots on the radio pumping gold, they're finally right. And now it's like, well, now they look like idiots because why would they be selling it to you? My father-in-law once asked that, because they asked me years ago, tell us when it's time to buy gold, and gold was going up, and it's like, it's time to buy gold. They're like, well, why would they sell it to you? I'm like, hey, buddy, you asked me. But he had a point. Why would they sell it if they believed it was going to double or triple in value? Now, the reason that I was telling them now's the time is because it was one of these periods where it looked like this. It was going up or it had bottomed out. The question is, do you have Landry Light histogram script or any other platform for any other platform? Yeah, it originally was developed in Metastock. It's called Daylight there, and that comes canned, so to speak, as the canned indicator with straight off with Metastock. If you go to my website and you click on the big orange button, learn more about trading or whatever it says in the middle of the screen, you can get all my affiliate links for all these products. And it won't cost you any more. In some cases, you'll actually save money on them. But yeah, Jeff, it comes canned with Metastock. I think somebody in my group has written the code for, or somebody else has written the code for Trading View. Somebody in my Facebook group, Dave Landry's Trend Traders, you have to be a member of Dave Landry to join, though. You have to be a paying member, I should say, has written the script for Thinkorswim. So it's out there. A lot of code out there for stuff. Do you think the IWM pullback forecasting for the same for the NASDAQ? Do you think the IWM pullback? No. Well, I don't know. Oh, that's a good question. So that's a good question, Brian. So what he's saying is the way the Russell's acting a harbinger for the NASDAQ? I don't think so. The Russell's been just abysmal for so long, and I don't know why that is. If I had the energy, and if somebody out here does, I would recommend you go through all 2,000 of those stocks and figure out what's keeping the Russell down. I don't know if it's I don't think it's equal weighted, but that would be a little, I know I'd say fun. I think it'd be fun to go in and see why the Russell is underperforming so badly. Okay, metals and mining, one of the few areas not doing so hot, excuse me, in spite of gold doing well. You can see they broke down today. They've been kind of wide and loose and sideways. Let's take a look at the gold stocks real quick. GDX, it's been improving as of late, but it's kind of wide and loose and all over the place too. So I would avoid that for now. Jeff, those zones that you just saw in, oh, you didn't see the zones. The zones, I was inspired by your 5% line for the TFM 10% system, and I put the zones in my ACP platform using my plugin there. So if you go to davelandry.com and it'll be up tomorrow, but you can find it on YouTube, your daily 5, and you can see that. So I wanted to thank you for pointing out that. Jeff pointed out that the TFM 10% system, when the market gets 10% or more away from the 50-week closing high, that's one of the rules for selling, and the second would be it has to close below the 50-week moving average. And he pointed out that when you're 5% or more away, usually the market is becoming quite iffy. A little bit more whipsaw because the parameters are much smaller, but he's got a good point about that, and I've been showing those zone lines ever since. So thank you for that, Jeff. That's what I love about teaching, is I learn so much from you guys. Thank you so much. Energy's bases, the media general groups, now they've been all over the place, but today they made all-time highs, so that's a great thing. Kind of excited to see these commodities waking up in the middle of a bull market. Commodities tend to be more like a value type of area, such as the energies. But it's kind of cool that maybe value and momentum can both be momentum at the same time. I can never remember his name, but he gave an excellent speech. I need to write it down because I reference it so often. But I think he works for the NASDAQ, and I know he works for the NASDAQ, or at least used to, but he gave a really good speech at one of the conferences that I attended, probably American Association of Professional Technical Analysts at conference. And he pointed out that if you never wanted to make any money, you put 50% of your money in a momentum fund and 50% of your money in a value fund. Value becomes momentum, and then momentum becomes value, but the two seem to be out of phase with each other. But right now, looks like they're going together, which would be a huge thing. Just as I have a similar setup for Landry Light and Thinkorswim. I just wanted to see if the histogram was available so I would not have to code it. Yeah, I can get you the histogram, and if you look in the group, somebody posted a link in the group, and it's kind of a cool thing. I've got it on a few of my charts over here. I've been playing around with a little bit. So that's one of the benefits of the Facebook group. We've got a lot of smart people there. I got a lot of great ideas from the group. Semiconductors look fantastic. This almost looks like a momentum setup, right? This is the whole sector. It could actually use a little bit more pullback. And one thing I've been thinking about a lot lately is that pullbacks are necessary, okay? A market can't just go straight up forever. You need pullbacks to shake out the nervous Nellies, to attract some shorts, it's just generally healthy for a market to have these corrections along the way. Now, obviously, the last correction when the market implodes, that's going to suck. By the way, speaking of suck, the cover of Barron's had a bull on it, which is scary. Usually magazine covers predict the top of markets when they start putting bulls on the covers, and they predict the bottoms of markets when they start putting bears on the covers, because usually the market is bearish and just looks abysmal. You can cut it with a knife, everything's so bleh. And then usually that's the time markets bottom out, and the magazines are pointing out that the market's due for another 50% more. But anyway, you can't trade off of that. It's not a good sign. It's not a good thing. Bonds, I haven't talked much about bonds lately. Bonds try to get off their butt. They have tons and tons of overhead supply, and now they're sort of rolling back over a little bit, so that's looking a little ugly. Getting back to the upside, home builders so far just pulling back in here. We could see some setups there fairly soon. Materials just pulling back off all-time highs, looking pretty darn good. Again, the energies don't look quite as good in the XLE, the ETF, as they do in the Morningstar groups. Not quite to all-time highs yet, but certainly improving. Financials just pulling back from all-time highs. And then just about done here. One area not doing so hot again is the metals overall. You can see they're kind of breaking down a little bit below that 30 EMA. And notice they're mostly sideways, or have been mostly sideways as of late. Okay, any individual stocks you guys want me to talk about? And let me jump over to YouTube and see what's happening there while you guys think about what you want to take a look at. Okay, it looks like no questions in YouTube. Okay. All right, going once, going twice, quite a bunch tonight. All right, obviously, I want to thank everybody for attending. I appreciate you taking time out of a busy schedule to be here. Anything unanswered, shoot me an email at david@davelandry.com. If you're watching the recording of this, leave me a comment, like, and subscribe. It really helps the channel out, and it helps me to bring you more and more of the free content. Everybody have a great weekend. Everybody here who's in Facebook, in the group, I'll see you tomorrow. Everyone else, again, have a great weekend, and may the trend be with you. Thank you so much.